Hello buddies, I am shivakumar.lachapeta, a certified equity research analyst, stock market investor, F&O trader with an experience of more than 5 years in the stock markets. Similar to my earlier videos, this video is also for beginners and people who want to know about stock markets. In this video, we shall learn about what is a mutual fund and types of mutual funds. A mutual fund is a financial instrument to invest in securities like stocks, bonds, and other assets. It collects money from a large group of investors and purchases securities. The fund managers operate mutual funds and manage the fund's assets. Their main aspiration is to provide capital gains or income for the investors. Typically, fund managers are experienced financial advisors with wide knowledge in securities investments. In return for the service, funds charge fees like entry fee, exit fee, and expense ratio from the investors. Every mutual fund portfolio has its own objectives and investment principles. New retail investors who do not possess any knowledge or experience of direct stock market investments can invest in mutual funds. Mutual funds are the most sought after investment vehicles among salaried people in India. There are over 13.65 crore investor folios related to mutual fund investments as on 31st August 2022. Total SIP accounts are around 5.72 crore. Mutual fund schemes are a part of the larger financial institutions or asset management companies, also known as fund houses. SBI Mutual Fund, HDFC Mutual Fund, ICICI Prudential Mutual Fund, Reliance Mutual Fund, Aditya Birla Sun Life Mutual Fund, and etc. are some of the top mutual fund houses in India. In India, mutual funds were first introduced in 1963. Assets under management is the total market value of all assets managed under a fund house. As on 31st August 2022, the total assets under management of all AMCs, asset management companies in India, are over 39.34 lakh crore. It has been risen by 200% in the last 5 years. Types of mutual funds. Mutual funds are classified based on their principal investments like equity funds, ELSS funds, fixed income or debt funds, hybrid funds, index funds, etc. Equity funds. The fund manager of the equity funds invests the money in buying the shares of companies in the stock markets. Depending on the size of the companies, the equity funds are further divided into large cap, mid cap, and small cap funds. The lower the market cap, the higher the risk. These funds are categorized as high risk investments. ICICI Prudential Blue Chip Fund, HDFC Flexi Cap Fund, Nippon India Large Cap Fund, etc. are some of the well-known equity funds. ELSS funds. An ELSS or equity linked savings scheme is similar to an equity fund but with benefits of tax deductions under Section 80C of the Income Tax Act 1961. The exposure is not only limited to stock investments but also fixed income securities like bonds as well. Nevertheless, majority share of the investments are in equity or stocks. But there is a lock-in period of 3 years and no provisions are there for early or premature exit in these funds. Well-known ELSS funds are SBI Long Term Equity Fund, HDFC Tax Saver Fund, Axis Long Term Equity Fund, etc. Fixed income or debt funds. These funds invest the collected money in purchasing the debentures or bonds belonging to the government and corporate entities and other money market instruments. Comparatively, debt funds provide lower returns than equity funds. These funds are also less volatile compared to equity funds and considered as low risk investments. QTI Bond Fund, Aditya Birla Sun Life Low Duration Fund, Tata Money Market Fund, and etc. are considerable debt funds in India. Balanced or hybrid funds. Well, we can get it from the title hybrid. The investor's money is invested in different types of securities like equity shares, bonds, and money market instruments. It is like diversifying the investments into various classes and reducing the risk associated and also improving the returns. These funds are in between debt and equity funds in both risk and return. Quant Absolute Fund, ICICI Prudential Equity and Debt Fund, Edelweiss Aggressive Hybrid Fund, and etc. are some examples of hybrid funds. Index funds. An index fund manager puts the investor's money in purchasing the stocks belonging to major stock market indices like Sensex, Nifty 50, Nifty Bank, Nifty IT, etc. Since expense ratio is less than 0.5%, these are cost effective and most suited for novice investors. Nippon India Index Nifty 50, Tata S&P BSE Sensex Index Fund, SBI Nifty Fund, and etc. are some of the well-established index funds. For more information on this topic, you can go through my article. I will share the description below. That's it, buddies. I hope this video is informative. If you like the video, share it with your friends. Thank you. Take care and goodbye.